ABB, that's the biggest stock to watch out for, up around 9 to 10%. Let's listen in what the management had to say about their earnings. I had the conversation with the management just a little while ago.
So I think the last quarter, which is the Q4 of 2023, did include a large order from the railways segment, so which was basically one-off in the times. And I think it has got both systems as well as services in that, and that takes time for execution. So I think while we say this, we really looked at the base orders, which is the bread and butter for the organization, and it also seemed to grow, if not 35%, definitely a good strong double-digit growth. So that's I mean the culmination of these two, I think probably led to the order growth in the in the last quarter.
There's just a follow-up there before I take it across. Elections are impending. Do you expect certain slowdown? Has that been the trend historically, that there might be a bit of slowdown in a couple of quarters just around elections?
I think the nature of business we have 18 business divisions operating in 23 market segment, and all those market segment has a kind of a duration for capex formation and spend. So from my point of view, I don't particularly see any direct impact on us, but there could be a marginal impact on the fringes of some market segments, but not at the core of it.
Okay, so not at the core of it, but you talked about how you have a diversified palette in terms of the capabilities that you bring on to the clients. But is there a specific industry or specific vertical which you think is showing more green shoots versus others?
We do have certain market segments which are tracking very well, and I think last time when we spoke, we also mentioned it to you. And there are certain market segments which have started working even stronger than before. Data center, for example, is a very solid story. Renewables, again, is another area which is tracking well. Railways and metro is contributing and also has a very good and solid pipeline. And power distribution, be it in the cities, in the industrial infrastructure, and also in the infrastructure in general, in the buildings and the high-grade buildings, that is also expanding for us. And apart from that, of course, we have multiple other market segments which are quite steady for the order intake for us. And our traditional segment, which we used to call as core market segment, we are also seeing good traction, which is coming in that, whether it is steel, cement, and other related industry. And then there are certain specific themes which are beyond the industry verticals. It is about energy efficiency, robotics automation to gain more productivity and the energy efficiency in the operations, and also looking for building automation, which really positively contributes into energy consumption of the tall rise building. And there we are seeing good traction as well. And of course, some new age technologies on the digital side being deployed by the process industry. That's another area wherein we are seeing some good traction.
Okay, so a lot of verticals actually firing away, whether it's data centers, renewables, railways, and the entire energy efficiency that you talked about. But exports as a segment has been a bit muted. I know you're focusing more on domestic because just the demand here is enough. But just wanted to get a sense from you from an industry perspective. When do you see a pickup in exports going forward? Do you think it's largely related to Red Sea, or there are structural issues at play here?
Well, it depends how we read the numbers. If I look into net increase on our exports, we have grown by 15%. But since the domestic growth is so strong, so in export, in percentage terms, from 12%, they look 10%. So that doesn't mean it hasn't grown in the absolute term. And being a multinational corporation, which is domesticated for a very long period of time, we are manufacturing in this country for the last 75 years. We are deeply engaged into domestic market, and that's our core focus. And since our operations are now very productive, automated, and also very kind of well diversified, so our global teams are making use of Indian operations to serve other markets. But our prime focus remains in domestic market, and we continue to serve our global businesses as requested by them.
Fair enough. The demand here is so strong that you don't have to worry about what's happening across the globe until and unless that demands come to you directly. But Sridhar, just wanted to get a sense from you regarding the margin expansion story as well. It's played out beautifully in this quarter, and I remember hearing it on the con call that you believe there are further levers available for that. I was a bit surprised by that because the commodity prices have again started inching up. Are you able to squeeze out that much efficiencies and command that better pricing that there would be more upside on margins?
So Anusha, I think thank you for this question. So first of all, I think what is going to drive the margins going forward is a good mix of orders what we have, right? So we have 8,400 crores of backlogs, and you have 15% of that is from large orders, and the balance is something which is going to be executed in the next few quarters to come up with. So now, having said that, with the revenue visibility which we have, and the orders which we will book and bill it out in the in 2024, I think could be an interesting play for us. So now with this particular momentum, what we have, I think our ability to convert them into profits at the bottom and at the end of the year, I think remain to be pretty much very solid on ground, because one is a product mix. The next is around how we leverage on the capacities what we have, and of course the localization which we are always talking about would definitely lead to the margin growth as what we see, right? But having said that, we will not be able to pass on the so-called the commodity impacts at what we used to do earlier. So there will be a bit of a stabilization which will happen on that, and therefore I think in the analyst call which we said is that we would like to continue the momentum as what we have at this point of time and make sure that we are on the double-digit corridor on a credible way.
Okay, we'll do with that double-digit number given the kind of context we have of the global headwinds. But how's the competitive intensity in this sector as well? Because there are a lot of these smaller niche players which are also coming up. Of course, they can't be in those large order categories. They can't qualify for that, which you have been doing rather well. But overall, how's the competition in the sector, or is it more of the same?
Yeah, I think we don't pay that much attention to competition because what we do is we pay attention to our customers and the market segments wherein we want to grow. And that's where exactly you get the understanding of the real market and how we should adjust our portfolio, how should we do the localization, and really come down to the the price expectations of the market so that we can gain volume. So that has been what our focus in past, and that's how we will focus in future.
So that's the management of ABB India in conversation with Anisha. Very solid commentary coming in to the extent that the entire market has gone weak in the knees right now, but ABB India stock is trading at sessions high, especially